Crypto is one of the most volatile assets on the planet. And that's the first thing people need to understand. Bitcoin, right here, the least volatile asset in the entire crypto universe, is still more violent than almost every major asset on earth. And the volatility you see right here, the 84% dumps, the 56% dumps, the 76% dumps, are a blessing and a curse. But we're going to break this all down today and more. So let's dive right back in. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. Share us with your friends. We want to build a huge trading community, and we want to help you master the marketplace. Come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. It is Saturday. Okay, it's Saturday, and market should be relatively quiet. We're going to do a little bit of a long form video today. I don't care about the haters that say, oh, this is too long, you talk too much. You know what? You want your 5-minute Fibonacci update, go over to Tic Tac Tac or go over to InstaTrash and get your 5-minute update. That's fine. You want to do that? Great. See you at the bankruptcy table. All right. But anyway, before we get into Bitcoin, Ethereum, and altcoins, I want to show you something important, because crypto's volatility isn't an anomaly. It's part of the journey. Now, I want to look back. I want to take you back to Amazon. Okay. We're going to also look at Google, and we're going to look at Microsoft. Amazon had multiple deep crashes. We had a 95% dump in Amazon back in the early days. We had a 66% dump, 39, 60%, 33. Totally normal. Okay, with new stocks, right, or rallying stocks. Okay, now I'm going to take you over. I want to take you over to Google. Google routinely has major crashes. It's been down 30 to 50% drawdowns routinely. Okay, we had a 67% dump in Google. All right, 34% dump, 27%, 31, 45, 24, and now it's at all-time highs. Okay, let's come on over to good old Microsoft. Okay, spent entire cycles cut in half at times. Microsoft. Okay, where's my Microsoft chart? It just disappeared on me. There's good old Microsoft. Okay, right now, as I was saying, Microsoft spent entire cycles getting cut in half. Okay, these are trillion-dollar companies behaving like small caps. Okay, show you again. All right, just make sure you understand. Look at Google. Look at the dumps. Look at here's Google. Sorry, here's Amazon. Look at the dumps, and here's good old Microsoft. Now I'm going to take you over to good old Bitcoin. All right, look at Bitcoin. All right. 84% dump in the past, 56% dump, 76% dump. Right now, we're going through a dump, but it's not even nearly as deep as we have historically seen. So why am I even bringing this up? Because if you look at Google, Amazon, Microsoft, early volatility, let's check out Google, right? Early volatility, then massive expansion, then maturity. So crypto is simply compressing that same evolution in shorter cycles. Bigger volatility, bigger upside, faster cycles. The only way that you get 500% growth in Bitcoin itself is if you have these dumps. That's just the way it goes. Okay, so what we've been trying to tell you all along is that this is kind of like normal behavior. Now, I'm going to get into the segment where I start talking about where I would start to get nervous about my overall view of Bitcoin going much, much higher. I don't believe I'm not the 2.5-year cycle guy thinking we're going into a bear market for the next 2.5 years. I don't think so. And really, I think the cycle has extended. Now, I'm in some good company with that, and I'll pull some research up, but not in today's video. But right now, what we're going to talk about, I want to talk about Bitcoin versus NDQ. Okay. Now, this is how, like, basically these cycles kind of, really just fake you out. So, now we got a lot of heat for this the last time we talked about because people are like, "Oh, now you're talking about Bitcoin versus the NDQ." It's all tied together, folks. Okay, we haven't decoupled yet. Bitcoin as an asset has not matured. Okay, so it is acting irrationally at times, but that's the way you get the big gains from. So this is where people either get shaken out or they level up. All right. Now we look at Bitcoin compared to the Nasdaq tech stocks. You're going to see retail panics. Headlines scream collapse. It's over. Smart money rotates really quietly. They really rotate quietly. So it's the same setup that marked the Nasdaq bottom in 2020. Ignore the noise. We got to focus on the Bitcoin setups. Now, in 2020, it was the same movie. Nasdaq nukes lower. Every headline was screaming recession, depression, the end of the world. Retail puked out at the bottom. Meanwhile, smart money quickly grabbed everything while everything felt the worst. They bought into the pain. Okay. Now, of course, you have to do this, very, very cautiously. Okay. I'm not just telling you just buy the blood. You got to pick your points. Okay. But really, that structure, that fake out marked the bottom for the NASDAQ. Now, are we seeing it today in Bitcoin? Well, Bitcoin had its big flush. Is the flush over yet? We don't know. I think we're in for some twists and turns, and we're going to go over that in the video today. But right now, and I'm going to get into that. I'm not just going to be that what do you call that, ADD guy. All right, let me just stay focused. I got so much stuff that flies through my brain at times, and sometimes it's not good. It's not good. So Bitcoin had its big flush. Retail basically is panicking again. You look at the fear and greed index, right? So some people say it's a lagging indicator. Yes, it is lagging, but really it doesn't change that much that quickly. Okay. The media is running the same crypto is dead cycle script, and we got the Bitcoin NDQ chart telling you that structurally this looks more like accumulation than the end of the cycle. That's what I'm seeing. Now you can read it any way you want, but that's what I'm seeing. Okay. Now, so the message is real simple. Don't trade the headlines. Don't trade your fear. Trade the structure and the liquidity. We got to follow liquidity, right? So ignore the noise, focus on the Bitcoin setup. Now, I want to go into like what are the four main components or signals, macro signals that would actually, make me start to waver on what I'm showing you here. And it's not happening yet. Okay, so I want to take you over to Trueflation. All right, let's go over to Trueflation and check that out. I'll put the link in the description for you guys too, so you can actually put this in your arsenal. But we're looking at Trueflation, U.S. inflation index. If inflation starts ripping up vertically, the Fed's going to need to raise rates again. That goes without saying, right? But higher rates kill liquidity, and crypto hates that. That would cause a severe turn in crypto, all crypto. Now, Bitcoin, again, as I said, is the most stable out of all these volatile assets. So it will hold up better than most, but it's going to dump if that happens. It's not happening. Okay, so Trueflation slowed a small uptick in inflation from April, but it's nowhere near a dangerous pace yet. If it accelerates, that will be a major concern. Now, we're going to look at the CME, the Fed tool, the CME tool again. Now, this is a wild marketplace. Right now, they're thinking 86.4% of a Fed rate cut. Okay? As we know, markets reacted violently when they thought that the December rate cut flipped from yes to uncertain. Now they're thinking it's going to be 86.4% chance of a rate cut. Okay. Now, if the Fed unexpectedly basically stays tight for longer, it's going to weaken like the short-term bullish narrative. Okay. But now I want to caution you. Okay. This is very, very important. This rate cut right now is already practically priced into Bitcoin. I'm going to get into it, I think, a little bit later in the script. I just want to make sure that I say this because it's on my mind. So this is going to lead to a potential. If they do it, Bitcoin's going to dump. It's going to come off, and it's going to be a total head fake downward. Okay, but when market's already priced in the rate cut, when you basically buy the rumor, you sell the fact, right? That is such a true saying. So we got to be on our toes for this. Now, remember, we went from 35% right now to 86.4% in a matter of a couple of weeks. This is insanity, okay? And then, we got lots of things going on in the background. We got, strategy. We got, Morgan Stanley Capital International after strategy. We got JP Morgan piling on. We got IBIT. There's so much happening. That's why I say that, if you want some help, just come on into our pro group and we'll show you how we deploy capital as the market's moving. Now, the third thing that would make me think that, this is kind of turning bearish is quantitative tightening. Is the Fed, pulling liquidity out of the system by letting the Treasury bills roll off. Okay? Now, the quantitative tightening ends as scheduled. That's extremely bullish. So we're waiting for that because that was basically, they said that they were stopping as of when? I believe December 1st. They're stopping quantitative tightening. If out of nowhere they decide that they're going to restart it again, well, that threatens liquidity and it kills Bitcoin and all the crypto markets. Again, it would go down into that 2.5 year cycle. But that's nowhere. They just don't change direction, like that. The Fed doesn't. It's a very steady hand. If they said they're going to do something, they do it. And they just don't flip back and forth. If you did that, do you think about monetary policy? It would be completely in the toilet, right? I mean, nobody would trust anything. So they got to have a steady hand with this thing. Now, we got to look, and I even have a chart up, for altcoins. Let me take it over there, right? We got to look at, the U.S. dollar index itself. If out of nowhere the U.S. dollar gains strength, if it strengthens aggressively, institutions are going to stay in dollars instead of rotating into risk assets. There's no reason to not, okay? Because you're basically getting your return, your sugar high off of the dollar, right? Now, so far, because the dollar up means crypto down, right? It's an inverse relationship. Dollar down, crypto thrives. Now, the U.S. dollar index has curled upward lately, but it hasn't broken structure. If it does break structure, caution. I'm going to tell you something right now. If you look at the British pound cable, GBP, USD, it's actually started to rally based off of the idea that there's going to be a rate cut in the United States. Dollar yen has cooled because of that. Now, if they don't do it, it's going to create turmoil again, but they're going to eventually cut the rate again. So we're going to get, knee-jerk reactions, and you got to be able to just be able to trade it. So that's why I say, you need some help, come on over with us. We'll be happy to walk you off ledges when they occur, because it's going to be a lot of ledge walking, I'm going to tell you. So what are the wild cards? What are the wild cards that could happen? Market structure bill fails. Major exchange collapse. I mean, these are things we don't know. New FTX style fraud happens. ETF flows, they reverse sharply. Unpriced geopolitical shock. Another war breaks out. We already know about, what's going on in Ukraine. It looks like that might be coming down, actually winding down, which would be a great thing. Nobody likes war. It's totally crazy. This day and age, come on. But anyway, right now, none of those are flashing red. And of course, there are some that we just don't know that, that could be the black swan event. All right, but we got to keep our eye on U.S. dollar dominance because that's something that we can see. All right, now let's talk about what's going on with Bitcoin right now. All right. Here's a little infamous 2-hour chart. Gave you a warning yesterday, said 93 was going to be resistance. We popped right into it and we came right off. So congratulations if you were able to trade that. You're making yourself a good $2,400 off that trade right now. So as it stands right now, looking short-term Bitcoin, okay? Short-term, we have minor support at 90,000, okay? Now, I'm not going to move it. I'm going to leave this main point up here. This 91,200 is a very important point. As I said in previous videos, that goes back to February of 25. Marketplace actually rallied off of this point up to like 104. Then once it broke this point, it went down to the lows of 74,000. Okay. Now, so we got a short-term minor support at 90,000. If we break that, we have a better support at 87,000. Okay, I'll take it down to this level right here, 87,300. If that level goes, we're breaking downward towards the main support at or a better support at 84, and if that breaks, we're at 82,000. Now, if that goes, we're opening up 78,000. If we break 82 and we break 80,600, we're opening up 78. Now, we're not there yet. Okay, marketplace is kind of stabilizing. It's not in a rip roar, bang the pots. We went over this yesterday. We got some issues up here. Okay, and I'm going to show you they're still in play. Of course, things don't change after 24 hours. But anyway, right now we're still on a sugar high from the Fed. So this is consolidation, right? We're not really near capitulation or consolidation, right? This is what I brought up before. If the Fed does cut rates in December, it's already priced in, and we will get a retrace. I've seen this movie before. So have you. You may not remember it, but you've seen the movie before. So really, it's the same moves, same setup, and it's a different month. I'm going to take you over to that chart right now to show it to you, okay? Hopefully I got it loaded up. This is what we're preparing our traders for. We're not saying it's going to happen, but we are preparing for this. This, we believe, is the most likely scenario, okay? We had a traffic set up back in, where was this? This was when? April? Okay, before we had the breakout upward to the all-time high. Okay, so we had the double bottom right now. We had a perfect Wyckoff spring off of the low where everybody said, oh my goodness, we're going to break down. We're going to break 68,000. And we hold firm, and we were right. Market moved up. Okay, so we got that call right. We're thinking the same thing is going to happen here, MicroStrategy setup right here. Okay, we're thinking that they're going to push MicroStrategy. They're going to push it down. Now, a lot of people, I talked to a lot of people thinking like, you can diversify. I don't know how you would be diversifying, because if you bought MicroStrategy, you're really buying Bitcoin. So I really wouldn't call it a diversification. Now you might want to take a flyer, put some coin, MicroStrategy in your bag with a tight stop if you think that seller is going to come out of this. But, right now, I would kind of stay away from it myself. I'd be like, look, we already got what's going to happen in Bitcoin. It could be quite volatile. But this is what we're thinking, okay? We're thinking that we're going to get a pullback from this 93, 94 level, and we could drop down to that 82 level. Okay, let's go back to my short-term chart. Where's my little short-term chart? Just so I could show you that level. Here's that level right there, that 82. Okay, that's what we're thinking. So it will be a higher low at that point, right? That means that if we reverse and break up through 93, we're going to shoot to 100,000, maybe even potentially like 104 again. Now we're right back into the same damn scenario that happened back in February. We broke 91, we rallied higher, and then that 91 is going to become all important. That's this level right here again will be all important. But look, I'm getting way ahead of myself, but I'm really watching the dance moves, because I've seen this play out before. So will it play out perfectly to what I'm saying? Absolutely not. But it'll be similar enough that we can understand what's happening. So that's really important. So that's what we're thinking. So basically what we're saying right now is that the Fed rate cut is now priced in. If they do it, this is the most likely scenario. If they do not cut rates, then we're going to have to change this idea. We could actually dip lower before, instead of getting this higher low, we could actually break through this 82, 80, 78, 77, and then get the spike. Okay? Now, again, I don't mean to be, I'm not talking out of both sides of my mouth, because there's so much that's happening in the marketplace right now that it's really difficult to keep your eye on everything. Now we got what's going on with Morgan Stanley Capital International. We got what's going on with JP Morgan Chase. We got what's going on with Strategy. Now, are they going to get delisted? That's the question. And if they do, does it really make that big of a deal? Some analysts are saying it doesn't make a big deal at all. I kind of think it's going to create havoc in Bitcoin in the short run. It's going to create incredible volatility, but it may also create like the buy of a generation if it actually drops deep enough. Because you know for a fact that IBIT and all the big boys are going to be looking. They just want control of everything. You know, that's what they want. Where's my IBIT? There's my IBIT chart right here. Okay, they want control of the rail. So if we're looking at IBIT right now, we had a nice little rally. We haven't gotten above 55 yet. So we're tracking in between, say, 50 and 55. We could expect another dump in this, which would mean what? It means money's leaving the ETFs again, right? So, or they're shelving the money coming into the ETF. They tell their clients, well, don't worry about it. Just hang tight. We're gonna get, you know, a better ROI for your investment here. Don't worry, we're going to navigate this. Of course, they don't say that exactly, but they basically do the wink, wink, nod, nod. You're like, don't panic. All right, don't panic. We got this. So you got to get ready for like round 2 is what we're talking about. So if we get this setup that we're talking about right here, where we get the double bottom or the higher bottom, then we got to get ready because we're going to be going what we call the reload zone. Right now, if they don't cut rates, it's a little bit different of a scenario, and we'll cover that in another video. So, but right now, this is what we're seeing. We're thinking that maybe with the way the dollar is acting right now, it probably might do it. But it's already priced in. So let's go on to the next chart where we say Bitcoin. We're going to look at 2021. We got the same setup, okay? 2021. Now, 2021, they beat us, right? They broke us down a little bit. We had one of those drawdowns, right? But this time, Bitcoin bounced off the retest. It's the first time that's happened, really, right? Usually it goes through, and the 2.5-year cycle guys would be throwing a party. Oh, we're going down for 2.5 years. We're going down to zero. Bitcoin stinks. It's, you know the story, right? But anyway, right now we got the same setup that triggered again, but Bitcoin bounces off the retest. If this downtrend breaks, the next phase begins. Now, it broke us in 2021, but this time we could get revenge on the bears and break the bears. Now, I'm not saying it's going to happen. I'm kind of like, all right, not, what I say, I think that we're going to consolidate a bit. Do I think that we're breaking really much lower? It all depends. I don't think it's going to be that bad of a deep retrace. And I showed you the other retraces on Bitcoin where we had over 60% drawdowns, right? Think about the guy bought 21,000 and went down to 3,000. You don't think that person wanted to sell? At that point, I'm going to be completely candid. If I would have saw that happen, if I say I bought Bitcoin physical coins, I bought at 20,000. And I didn't have the foresight to sell, say, at 19 to try to buy back again. Let's say I just said, oh, it's going to go up. And then I come in and I look at the marketplace at 3,000. At that point, I would have said, well, dead for dead, that's it. I'm not doing anything. That's what I would have done because I'm already done, right? So what's another 3,000? I lost it all anyway. All right, might as well just hang out because really, when you're in that deep of a drawdown, there's no recovering from that. There's no recovering from that. So in other words, you can't start buying and selling at the $3,000 level to make up the loss. It's impossible. So you might as well just, dead for dead. I'm not going to move. Let's see what happens. And guess what? Now, what would have been more important is if we broke up through, say, 21,000, would I have had the guts to hold? And that's a hypothetical. And I don't know. I'm just being completely candid. I don't know. I'm not going to say, yeah, what I held and I sold it at 126. I don't know. I'm just, bringing it up. All right. So now, really what we're looking at itself is that we could potentially get the bears. We don't know. All right, but it's in play right now. All right, let's move on over to Ethereum. Ethereum. Oh, before I go over to Ethereum, I want to talk about this chart again. We brought this chart up, okay? This was the other point that, we're banging into the old support line, which has now become resistance. As long as we hold, let's say 68,000, we'll be good, okay? But it's going to take a lot to get through this old support line. It's not going to be just an easy thing. So if you think we're sitting above 90, it's going to happen. Look, curb your enthusiasm, okay? You're going to have to trade this, as I said. So don't think that we're just going straight back up. We're not. Okay, because what you're doing, you're setting yourself up for an emotional capital drawdown. You'll get discouraged. So I'm just telling you, just bear with it. We got to be patient. We got a lot of stuff that's working. So we just have to, just be patient with it. All right. And don't, again, curb your enthusiasm. Let's move on over to Ethereum. All right. Ethereum, we brought this chart up yesterday. And right now, Ethereum is trading right below 3,000. Okay. Bearish elements. All right. Long-term holders sold into the recent move that we had, the pop-up. All right, something's up with that. We had a hidden bearish divergence on the chart, and I'm not too worried about that. Sluggish rebound, because it's all about Bitcoin right now. Okay, and we talked about this. We said we need Bitcoin dominance to go up. Now, I'm going to go over that a little bit later in this video, because we probably can see Bitcoin dominance start to fall, which may fool everybody with altcoin season. We can get Bitcoin dominance falling for the simple reason Bitcoin starts to fall because of what I just went over. But then we can get a spike back up again. Once those bottoms hit, we can get Bitcoin dominance rocketing again, which will fool everybody. That's what I'm trying to tell you. For alt season, you got to be cautious with this, okay? We're not near alt season yet. Don't get fooled. Don't be so over enthusiastic about it that you're just going to say, oh my goodness, Bitcoin dominance is down. It's at like 58, 90 right now. It's turning. No, we could get that because Bitcoin itself drops, but it's falling right into the area where everybody's going to buy it again, and that's going to rocket Bitcoin dominance up. Remember yesterday we said we need dominance about 60%, maybe even a little bit higher, but we need volume on the breakout above 95,000, not heavy volume. We need continuous volume. So because a huge amount of volume on a break upward is just basically short covering. We don't want that. We want continuous volume. All right. So, and we'll alert you to that. Now we got bullish elements. We got Ethereum, Bitcoin entered a macro reversal zone. Bitcoin dominance basically is topped out right now at like 59.5%. But it's still, like I just went over. It could come off, but it could spike back again. So we got to be cautious with this. We got historically. Yes, this is where, L2s and also altcoins begin rotating. But we got L2 activity and we got Google Cloud integrations that are heating up. So what's the key levels in Ethereum right now? Ethereum, short-term support, 2,800. Major support, 26. Resistance, 3,100. Breakout, 3,300. Now, Ethereum isn't leading yet, but the cycle is preparing. So we got some early signs for Ethereum. We got price coiling tight. Anybody have an argument with that? Right? Can't argue with that, right? RSI already broke out. You can see that clearly on the chart, right? Now, here's the thing. Price lags, RSI leads. Moves like this don't stay quiet for long, okay? Now, Ethereum follows. If Ethereum follows and breaks 3,400, okay, we're looking much higher. But right now, the first key test is 3,400. So momentum is shifting. Eyes on Ethereum. You're going to have to, trade it. All right. That's why I suggest you get into the pro group. But so how do you join this pro group? All right. That I keep talking about. Well, really easy. All right. Come on over to the description in the video. Here's the video link that you click. Here's the link in the description. You click this link, you'll be taken over to our pro Telegram trading community. It is completely free to join. Okay, completely free to join. All right, we drop insane alpha, trading opportunities daily, shorts and longs. I showed you those trades yesterday. If you didn't see yesterday's video, go check yesterday's video out. It's really cool. Hey, if you just want to go it alone, you don't like people, I get it. You click this link right here, you'll be taken over to WeX. Through our links, we have some really good bonuses. Right now, if you join up WeX, low fees, fast execution, what you're going to get is no fees for life. We got BTCC, low fees, fast execution. What you're going to get basically is a $500 giveaway. If you got a small account, it's a really good way to boost your account. However, I would suggest that you join our pro group where we do all the work, the heavy lifting for you. Okay? So remember, we're here for you. Yeah, it's up to you. You want to come on in? Come on in. Again, it costs you nothing. You can always leave if you don't like it. Anyway, let's get on to Bitcoin dominance. What's going on with Bitcoin dominance and what we need to see. Now, this is what we said yesterday. Okay, so this is forward-looking, people. Okay, this is forward-looking. It has nothing to do with now. All right, I got to make that point because a lot of you guys, you don't listen. You just quickly look and go, oh, you said Bitcoin dominance at 60%. No, it's not. All right, Bitcoin dominance right now is at 59.30. But this is what we said yesterday, okay? We need a steady rise in Bitcoin dominance because then we can say that the market is rebuilding a base before the next real leg up. All right. So the good news is Bitcoin dominance is still holding solid. Okay. The not so good news is it probably needs to hit 60 or 60 and a half before we get any type of real momentum for what? For that trend line break that I talked about right here. I'll show it to you again. Because now we are butting up against the old support line, which has become resistance. I also went over yesterday, said markets can actually, cover the same ground twice. We talked about that. So 2.5 years we were inside the channel. Now we're testing the base. So this is where the winners step in or the crowd's going to run away, right? So the bounce is here. We don't know. If it is, it's going to be a liftoff. It's a breakdown. We expect maximum pain. But then it goes into those 4 points that we have to look at. What's going on with the Fed? What's going on with trueflation? What's going on with quantitative tightening? What's going on with the US dollar index? So there's a lot of components to this. It's just not, oh my goodness, we're dropping down. There's a lot of components. The only thing that's going to make me switch is if I see a major change in in those 4. Not in any one of them, in all of them. All right, so this is what we're talking about right here. Now, we said there's a point that what I'm trying to get out right here is that we could see Bitcoin dominance come off, okay, as Bitcoin does the dip, what we talked about, okay? Now I'm back to Bitcoin again. I was trying to exit, but it just hit me. Okay, this is what I'm talking about. The setup, the strategy setup, or very similar to what we call the traffic setup. Okay, so we could see Bitcoin dominance start falling, coming right down into the areas that everybody or the big players are going to look to buy it, which could then rocket Bitcoin dominance back up. Now, that's where we just said that we need basically Bitcoin dominance to get up at 60 and a little bit higher with volume above that trend line break to actually catapult us into the stratosphere. Okay, that's all I'm saying. So let's go on a little bit what's going on with Bitcoin dominance right now. Okay, we talked about it yesterday, and I just reiterated it again today because I'm just neurotic. So with this chart, things are going to get tricky. All right. And this is where we could get fooled if we're not completely aware of what the marketplace is actually doing. Okay. And I just went over the points that, we could get dominance that starts to actually come off. It's going to fool everybody thinking alt season starts, but really just be cool. Okay. Just be cool. Now, if we look at altcoins today, we got some strong performance on the week, which basically, well, here we go. We got US dollar dominance that hit resistance. Market cap retested its floor. Previous setups triggered some altcoin rallies. Not all. We got XRP. We're going to cover XRP and in a special little session. That signal just printed again, and you already know what's next. Like, so altcoins are split right now. There's a strength in a few, weakness in very many more, right? So we had SUI that was up, Bonk, XRP, ENA. These are showing some structural strength despite some volatility. XRP is really important, okay? Most mid caps are still building bases, still forming structures, still waiting on liquidity. They're not getting any liquidity because Bitcoin has taken all the oxygen out of the room. I can just tell you that right now. So we're early, but we got some signals that are forming. All right. So what do you got to do? Well, you can come on over. You got to make sure that you follow us on X. What's the big takeaways for today? If you get anything out of the open, and you look at Google and you look at Microsoft and you look at Amazon, if you get anything from it, you got to remember that markets reward discipline, not emotion. Crypto is noisy, so is Google. Okay? Crypto is volatile, so is Google. Crypto, unpredictable in the short term, so is Google. But if you track the macro signals, you respect the overall trend, and you manage your risk, you stay in the game long enough to capture those insane gains. You don't get insane gains unless you get insane volatility. So congratulations, you have entered the crypto space. Make sure that you come on over to X and you follow us on X, where we talk about Bitcoin, crypto all day, every day. And what do you got to do? Well, you got to do your own research. As you know, I am not a financial advisor. I am a trader just like you. What else you have to do? Well, you got to really think about joining our pro group. What else you got to do? You got to trade with your head, not over it. Don't over leverage yourself. And what else you got to do on this Saturday? You got to write it down, put it across the top of your terminal. As a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Hopefully we'll have some good topics for you. Leave some comments for me. Tell me what you would like me to, if you want to, if you have anything in your mind that you want me to cover, leave it in the description. I'd be happy. If you've got some people that say, hey, do this, why not? We'll do it for you. So remember, always stay safe, stay profitable. I'll see you tomorrow. Cheers.